Okay, so one of the big stories, of course, earnings season is the big story around, but of course, the election still making the headlines. As far as the market is concerned, kicked the elections out of the way. Politics is still making the headlines. Earnings is the one that's kicked in right now. But let's start with a big story around MTN Group, the South Africa-based Pan-African telecom operator. Says its revenue rose 17.1%. Last year, subscriber base was up 11.3%. Earnings before interest, taxes, depreciation, and amortization, that's EBITDA up 30.7%. EBITDA margin increased 4.5 basis points to 43.5%. In terms of data, MTN Group says it makes its data revenue increase 40.1% year-on-year in 2018. Meantime, capital expenditure for this telecom giant down 18.1%. Some of this big money is to be made from the Nigerian market, where the MTN is now making some announcements, as we have seen in the news, that Nigeria's listing on the stock exchange will not be first via IPO, but listing by introduction, which means all plans that the MTN will sell its shares of its Nigerian unit and proceed to list on the exchange is being revised. So it will now be a listing by introduction. How long it will take MTN to do an IPO after listing by introduction, we don't have those details yet, but those plans have changed. No IPO for now in Nigeria. It's going to be a listing by introduction. That's the story around MTN this morning. But what's Stanbic IBTC bringing onto the table this morning? Earnings per share, 1 naira, or 7 naira 4 kobo, but a cash dividend, a final dividend, 1 naira 50 kobo, because this Tier 1 lender reported net profit of 74 billion for 2018 from a gross revenue or gross earnings of 222 billion naira. Is the earnings season we had GT Bank and Nestle yesterday? Let's get a bit more of these details and chew this over with Temple Ashaju, business correspondent who's live to us from the Nigerian Stock Exchange. Temple will be taking us through some of these numbers. But if you look at some of the industries, Dangote Cement came in very good. But again, Nestle also in good. But again, if you look at the details and break it down, quite of what you call the devil is in the details for Nestle Nigeria. Quite of what the analysts are pushing out over the last 24 hours shows that Nestle is battling some issues within the Nigerian space. Operating expenses are very high within the 2018 period that this food giant just finished reporting. Seplat was one big story you had during the week. Earnings per share a bit in the water, about 45% decline. But the company is still paying some dividends. So let's get Temple Ashaju in to the conversation. Temple, let's get back to your market straight with the earnings, big earnings. Where are the big stories here for you? The big banks, Seplat, Nestle, the big food giant, or the food giant, so to say, the big boy in the food business.
It looks allowing the big ones to come in before it gets to the medium cap or mid-size companies, and then it goes to the lower class in the market. Well, correct, Bosun. I mean, this whole earnings came in with a bit of concerns for a lot of investors. But I must also introduce our guest that we also have here. That's Victor Chazo, head of research at FSL Securities. Thanks a great deal for coming on the program. But Bosun, to answer your question, I think my interest is more in Nestle. It's a food giant. The fact that the food and beverage segment of the market was basically the key segment of that company that drove up the performance for the greater part of full financial year 2018 is something really, really impressive, in spite of the fact that there was a bit of a cost of operations that also improved, that really, really rose by some 11% for that calendar year. In the Q4, we noticed that was where they had more sales. The flagship of that company product, in terms of the product, that's the Maggi, was a bit of contributed some 2.8% of the beverage segment so that earnings for the fourth quarter of last year. And of course, the fact that the the earnings, the dividend that was declared is it's something really, really attractive, has continued to drive up, demands too on that particular company. Yesterday, we didn't see much difference in the share price of the company, but the fact that it came with a total or final dividend of 38 naira, coupled with the interim dividend that was earlier declared, it's something way more than 40 naira, and investors are really, really concerned about that. We know that a lot of investors have actually taken position ahead of the earnings that came in. At a point in time, I think Nestle actually hit 1,600 naira, but as of yesterday, it was still trending around 1,510 naira, and I'm sure that our guest here, Victor Chaza, will be able to shed more light on all of those earnings as regards Dangote Cement as well as Seplat that also come in. I don't know what your initial impression is about all of this before we take it back to Bosun.
Yeah, thank you. I think the numbers that have been coming in have pretty been strong. Likes of GT, likes of Stanbic, likes of Seplat. I think these are numbers that would actually help the market move in the right direction. So I expect to see some price appreciation in some of these numbers, except for the likes of Seplat, where I expect to see a beating on because of the drop in net profit. So overall, I think the numbers that have come in so far have been good.
Okay, let's kind of narrow down on Seplat, for example. Yesterday, it actually lost some 3.57% in terms of the share price. Would you say that a lot of investors are disappointed in the decline in net profit, or it's the fact that the dividend of 5 cents that was declared or proposed is about the same thing that was also proposed in the preceding year? There's been no difference, kind of.
I think for Seplat, it's a bit tricky, and I think this is where smart investment comes into play. If you look at top line was up about 65%, but profit before tax was up about 499%, while PAT was down. For me, if you look at it, it shows you the current standing of that company. For now, investors might downplay the price in terms of profit after tax decline, because they will be saying, okay, you didn't make an improved profit after tax, so we don't expect to see your price appreciate. But if you isolate what happened in 2017 from 2018, you find out that there was a tax credit which actually boosted the profit of Seplat. That came from the pioneer status which Seplat has been enjoying over the years, and that made profits after tax jump up for that 2017. But for 2018, they didn't enjoy that. We saw them take a tax charge, which actually dropped profit after tax. But if you isolate, take that away, and stop on your PBT, you find out that the company has actually enjoyed and has shown some bit of forward movement. So going forward, I think the price might take a beating, and I expect smart investors to come in at that point where you see prices come down a bit. Because going forward, the truth is that for Seplat, oil prices remain the major benchmark for that company. Yes, they've made inroads in terms of their gas revenues. We've seen gas revenue increase over 2017 numbers. We've seen them make inroads in terms of their Transfogados pipeline. From their numbers, they showed us that at least that their operations were up about 85% for the year. So there was no serious downtime compared to 2017, where we saw some bit of slowdown in terms of the pipeline being closed for maintenance and repairs. So going forward, I think what investors need to be looking at is that the company's balance sheet is looking good. Debt levels are good. Currently, they have a total debt of about $450 million US, and they have a cash balance of about $585 million. So for me, the company looks good, and I think going forward, once the price takes a beating, I'm sure investors will pick up interest in that company.
You talked about the tax credit that Seplat actually enjoyed for the greater part of the preceding year, but they didn't enjoy that. The Dangote Cement actually enjoyed the same thing in terms of its pioneer status, raking in some 89 billion naira for that. But let's go back to Bosun and get some more questions from Bosun. Back to you, Bosun.
Yes, Temple, why you guys are more interested in filling your tanks with oil from Seplat and whatever? I'm still interested in the food business. And this is one story around Nestle. If you look at some of the analyst comments breaking down Nestle's earnings, and this is what I think I would like Victor to speak to, that there's a revelation that volumes of sales by Nestle is decreasing or stagnating. Look at the numbers. Tempo plus 1.5% in Q2 last year, and negative 0.8% in Q3, and a further negative of 6.7% in Q4. Some analysts are saying this company may have to increase prices because there's a major issue with what you call in the macro economy in Nigeria, where demand is slowing slightly.
Yeah, Boston, I quite agree with that analysis, but I'm sure the team at Nestle will be looking at what's happening in the economy. We noticed that if you look at most players in the consumer space industry, they've seen quite a bit of downtime in terms of their numbers. They've seen revenue actually taking a beating. They've seen consumer disposable wallets come under significant pressure. So it's a bit hard to say that they expect to see their revenues grow up in terms of sales of their goods. So what Nestle is currently doing is, yes, they've diversified. So whether you like it or not, you must patronize Nestle. So they found a way to make sure that their goods go on sale in terms of in each and every household in Nigeria. So apart from that, given the economic downturn, I've noticed that Nestle has become more efficient in terms of managing their numbers. For Q3, we noticed that their numbers took a little beating, but Q4 we saw some upsurge. We all know probably because of the festive season and a lot of spending during the period. But outside that, in terms of efficiency, we saw top line grow. We saw a significant decline in terms of the interest expense as a result of the FX evaluation and foreign exchange evaluation, and we saw profits go up significantly by 27.5. If you look at its competitors, you find it's rare to see any of the other competitors that actually saw top and bottom line grow. So I think for Nestle, it might be a brand that you might need to properly monitor in terms of for those in that line of business, because the truth is that we're in tough times, we're in challenging times, and the truth is that things are not going to change anytime soon. So for you to going to post improved profit, you need to show some level of efficiency. Your PBT margins need to be up, your gross profit margins to be up, you need to keep cost of sales down, you need to keep cost of goods produced down, you need to keep operating expenses down to make sure your bottom line sees some decent numbers.
Got to be very careful here. Nestle, for example, reported a 50%, analysts saw a 50% increase in advert spending by Nestle last year, 8% of total operating expenses. So I'm not going to go there because we need the advert revenue. So I'm not going to touch that. So, but let's talk about the banks. Stanbic just came in with 7.4 kobo earnings per share, and in final dividend of 1.50 kobo. This just came in straight in this morning. Let's chat to this a bit. Tempo and Victor.
Sure, first, I think I should allow the analyst to go first before I, the journalist, actually talk.
Yeah, for Stanbic, he came in this morning. Quite a decent number, as you can see. Top line up, profit after tax up. What interests me in the banking space is that for the three banks that have released, the three major banks, GT, Zenith, and now Stanbic, you've seen that loans and advances to customers have actually declined across board, and that is quite worrying. For the likes of Stanbic, the major boost to his bottom line was the impairment charge. They had a write back of about 2.5 billion, and against a 25 billion impairment charge for 2017. So that was quite a major boost for the bank for this full year result. And for dividends, quite impressive. Stanbic has not been known to pay anything above 1 naira for full year, but for them to have come out to declare 1.50 kobo dividend for the full year, I think is quite impressive. But in terms of dividend yield, compared to the likes of GT or compared to the likes of Zenith, it's still quite low. For going forward, I think we might not see that much appreciation in terms of price movement, because for the likes of Zenith that has dividend yield above 10%, the likes of Zenith dividend yield above 6.8%. for Stanbic that has dividend yield ranging below 5%, I don't think we might see that much traction in terms of price movement. But I think overall, in terms of the numbers, I think they've done well. But the truth is, interest income for this bank, they need to focus. Because if you look at 2018, we noticed that across board, Zenith, GT, Stanbic, interest income have dropped. So they've been able to rally profits from trading income, from FX income, from treasury bill trading income. And for me, that is not really core banking, because going forward, I expect, as we've seen, that yields will drop. And for the fact that going forward, we expect yields to remain at a lower level compared to 2017 levels, that is going to impact their profit levels going forward. So what we expect to see is that most of the banks are going to have to go back to the business of banking and grow income from their interest income levels going forward. Outside that, for the likes of GT Bank's numbers was quite impressive. PBT margins about 49.59%. That was quite impressive, form of PBT margin of about 47% in 2017. I think if you looked at their numbers for 2017, nobody would have expected them to increase PBT margins from about 47 to 49, almost approximately 50. That shows you efficiency. For a bank that posts a revenue of about 434 billion and about 50% of that revenue goes into profit before tax, that shows you that bank knows how to run a business. And I think that those are the kind of businesses that other players, other companies listed in stock exchange might want to pay close attention to. How are they making these profits from the revenues they're making? The likes of Zenith, they posted a profit, a revenue of about over 600 billion, but PBT margin was still, though it improved, was between the 30% levels. So for Zenith, efficiency has actually been key, and I think that's the bank to watch going forward. But overall, pricing in terms of investing in this market is key, because the truth is that you need to buy low and sell high. So pricing is key. Looking at what's been happening, we might see some price appreciation. That might not be the right time to buy, but we expect to see some price moderation, and I think that might actually be the time for investors to be looking at this market.
I think one key thing again will be the fact that Guaranty Trust Bank on its own part was able to have some decline in the provisions and operating expenses, as well as the fact that there's a healthy ROAE by some 31%, which also helped its profit after tax. Anything you want to say about that?
Yeah, I agree. We've noticed a significant decline in terms of provisioning. Like I said, for Stanbic, we saw a right back. For Zenith had about 80 billion in terms of savings from impairment provisioning for 2018. For GT, we had a similar savings, but not as much as we saw in the likes of Zenith. For GT, if you look at the numbers, most of his income came from FX trading gains, FX transaction commission, and FX revaluation gains. If you look at the numbers, that was where the bulk of the income came in. And going forward, the truth is that they might have to look for other means to make this money, because I see income from those lines of business being threatened in 2019. So I expect them to begin to go all out to lend.
This has always been the advice from a lot of analysts regarding how they can actually diversify and go core banking and then investment banking and see how they can actually improve on their loan growth. Bosun, over to you. Anything else you want to say, sir?
Yes, what I want to say thank you to Chazo, Victor Chazo of FSL Securities. Thank you, gentlemen. But the big story is around MTN announcing its plan to list by introduction. I'm sure that's a conversation for another day. Very big one. Thank you, gentlemen. Let's take a break. We're right back in 2.